Yeah.
So good morning and welcome to Weekend Chat with Weekend Investors, and we are welcoming Mr. Bharath here. Bharath has been with
Thank
Weekend Investing for some time, and we are going to ask him about his experience before he joined Weekend Investing, how long he has been investing, and what has been his learnings through all his investing journey, and then why he seeked other avenues and found Weekend Investing, and how he found Weekend Investing, and what has been the journey since then. So over to you, Mr. Bharat.
Yeah, actually, my investing journey started sometime in 2015 time frame. The reason is actually I'm working in Bangalore for since 1996. It's 25 years, and most of the time I was just busy with my work, and I never understood the concept of investing or concept of compounding. And I think some fault is there with the earlier generation also, because they never taught us anything on investing.
Correct.
And also in the school time frame, nobody taught us actually. And
Yes.
in the 10th standard, we used to have some on the maths, right? We used to have shares, debentures, and I never understood that subject, and I used to hate it. And
Yes.
I think the earlier generation only told us that you should work hard in life, you should work hard in life. I think that is one of the mistakes actually. It's really not required to slog in life actually. You can just take it easy and you can take it comfortable if you understand the concepts of compounding. Like very simple concepts, like if you just invest into PF, PPF, EPF, 1.5 lakh rupees for first 10 years and not withdraw it, and let it build it up over a period of time, it can create a handsome corpus.
Absolutely.
So those kind of concepts are missing actually. I think everybody is to be blamed. I think for elders, teachers, even in college engineering, nobody taught us like about finance.
Correct. The education system has a big void on this one. Yeah.
Big void. Actually, nobody taught us about like how to handle your finances. I mean, that's the big.
Yes.
That's the worst part of it, right? I mean,
Absolutely.
you know how to
Absolutely.
you know how to make money, and you slog. I mean, you slog throughout the day. Like, I mean, you go to office, you work, and then you will make money. But you don't know how to build up from there onwards, right? So that was a big issue. So in 2015, I think what happened is like I had sold my house in Bangalore. So that is the first time I got a big corpus thing. And that's where I think I started thinking like, what should I do with this money? Should I put it into another property, or should I put it into gold, or should I put it into debentures, or are there any other opportunities? Before that, I never thought about it. I was so idiot that our companies used to give shares, and I never used to look at it like what the shares were, or like, and most of the time it used to just go underwater kind of stuff in losses. So I went to my friend. I mean, that's the first thing you do, right? You have lots of money. You approach somebody who know that who's been doing this for long time.
Correct.
Stuff, right? So then he suggested that one portion you put it into another property to save on the long-term capital gains, and another portion you put it into debentures. I don't like that concept of debentures now, but that time I didn't knew about the NCDs, and I fell into it, and for 3 years I locked my capital, and every year I used to pay taxes, 30% taxes on it. So one of the worst instruments anybody can ever encounter. And then I think he showed me the script box concept of script box. So script box I think was relatively new at that point in time. They had a wonderful concept of like from 8,000 or 5,000 mutual funds every time they used to churn out, select like 4 equity mutual funds and 2 debt mutual funds. And so I just registered on Scriptbox and then started investing on a staggered basis, like every month 1 lakh, 2 lakh kind of purpose. I put it up. Interestingly, 2015 was a time frame where like I think we were in a start of a bull run. And the
15 actually was going downwards the entire year.
Yeah.
So 15 was downward, and 16 onwards actually we took off.
It started to, yeah. So I think then once in a while I used to monitor Scriptbox, and he was really surprised by the returns actually. I used to see in the Scriptbox. So that's where I think I started thinking that if these guys are able to do it, why can't I do it? So those are some of the initial mistakes I would say. Not that like I want to compete with mutual fund managers.
Correct.
So then I started reading all this. Somebody pointed me to Intelligent Investor. You should read this book. It was very difficult to read, but I went through the whole stuff. And then my reading journey started. I read almost like 55 books of all different kinds, like
Wow.
on value investing, Warren Buffett,
Okay.
Peter Lynch, Charlie
Fantastic.
Munger, Said Klarman, or everybody. And so I started thinking that this value investing really works. And somebody then pointed me to Screener. And Screener has a list of fundamental parameters that you can screen. And you can also have cash flows, and you can look at cash flow statements, and then you can do discounted cash flows and come up with the intrinsic value. So I had, I think once I had discussed with Ayush or Amit, one of the two, that what is the formula of discounted cash flow intrinsic value that they compute. So he said like I cannot disclose that stuff. So I said it's okay, I'll do it. So I did. Then I went through this. There's like 5 principles of investing by Pat Dorsey, and he has a chapter dedicated to discounted cash flows. So I became a big fan of discounted cash flows, but unfortunately DCS don't work very well in India. And especially like when valuations are very high, then you really don't get 30% discount to intrinsic value, which everybody has to tell. So I tried all that, and I thought maybe I had to wait forever kind of stuff. So that was one part of the journey. I still like mutual funds and index, ETFs, and all those things. I understand most of the stuff, but unfortunately, when markets are heated up, I think these are not the products that you really look forward to. So you wait for a crash. So it's like another concept of a wait kind of stuff. So then I was reading this What Works on Wall Street by James O'Shaughnessy, and he has taken every value parameter, and then he has documented with respect to a set of parameters what works and what really doesn't work. So he has taken all the value parameters like PE, PB, price to free cash flow, and everything. And for past 50 years, he has run through computer programs to tell that if you pick it based on this, then you get these kind of returns, and if you pick based on this, then you get this kind of returns, right? So in the end, he concludes that there are two things that actually works. If you look at past 50 years or say 200 years, momentum works for 200 years, and then value investing, he has looked at all the parameters that they work for almost like 50 years. So these were the long duration data.
So Shaughnessy prescribes momentum as his preferred.
So let me just complete. So he says value investing works and momentum investing works. And he says the combination of the two works phenomenally well. So so that's where I got started with momentum. I read all the papers by Jagdish Titman and like there's so many Ben Carlson and everybody and stuff. Right?
Fantastic.
So my journey started from value investing and then migrated to a momentum side of things. Earlier I never understood momentum or what exactly it was. It's very difficult for a value investor to understand what exactly is a momentum, right?
It's a totally different sort of a mental setup.
Because if you tell somebody that you buy low and sell high, right? Even a guy who's walking on the street understands that because he's selling some fruits or vegetables or something, right? So that's a traditional model to be in, that you buy low and sell high and make money. Correct. But you buy high and then sell higher, it's very difficult for people to understand, right? So I was very lucky in a sense that I had many friends in my colleagues in my company, and they used to actively discuss and thrash out ideas and so before 2015, right, I used to run away in those kind of discussions because I never understood mutual funds, I never understood equities or anything. I used to hate those discussions. And then slowly while discussing with these guys, right, it really changed my journey altogether. So it started from scrip box, then mutual fund, then ETF, then index funds, then your small cases, momentum, and everything. So that was
fantastic. So how did you find weekend investing? Where did you find weekend investing?
So weekend investing, I would thank all my colleagues at the company at they discovered it. So those guys they are always looking for newer products, newer strategies, like what works, what doesn't work, kind of.
So I think your transformation came from not looking at financial markets totally, and to becoming like a wholesome reading machine for all these books and
So,
concepts and even technical papers you have read. I mean, that's amazing.
Right. So I think the main thing I was looking for primarily was not like say individual equity. I made huge mistakes actually. I mean, yes, bank was
Sure.
the biggest mistake actually. I lost a lot of money in that. And I was reading this guy Howard Marks, and he
Yes.
said like, you should catch the falling knife with care. I mean, that was one of his
Yeah.
statements that thing. I didn't figure it out that he was talking about bond markets and he was like very much interested into this bond market stuff. So I started averaging down years back. I think that was one of the biggest mistakes. Stuff.
Okay.
And I averaged it very badly.
So I
So
think
I lost-
you also paid some, learning fees to the market, like a lot of people do.
Correct.
And everybody
So-
has to do actually at some point or the other. Otherwise, the learning doesn't come.
Right, exactly. And I think there is no harm in accepting the fact that you made mistakes somewhere.
Yes,
So
absolutely.
then I realized that the individual companies, right, when they fall, they may not recover. But
Yes.
a set of companies, if you select,
Yes,
then eventually
yes,
they recover.
That is
I mean,
very key. That is very key.
That is very
Yes.
key factor. So then I started saying that okay, enough of this individual equity nonsense. Let's just go with strategies. Let's figure it out
Yes.
what strategies work and what strategies don't work.
That's a great
Like
point.
James Shaughnessy point,
Yes,
right?
yes.
So stuff. And then I think there is one more guy. I'm forgetting his name. He has written a one phenomenal good book on psychology of investing. And
Okay.
maybe after this interview, I can
Sure.
send you the link.
Sure.
And in the end, he also tells about this value investing works and the momentum investing works and the combination of value investing works stuff.
Right.
So when colleagues, I come from reading background. Okay, so
Yeah. Okay.
I do my slow study and then I make my
Yeah.
notes and then I
Very nice.
make sure that my conviction is enough. And
Yes.
then colleagues are in a very fast mode and they are continuously discussing in the tea time break. And then they figured it out that the small case product is coming and then
Okay.
there's some momentum kind of thing is coming.
Okay.
Before that, I think NSE had launched one momentum index and UTI was trying to bring up some
Yes.
mutual
Yes.
fund,
UTI. Yes.
based on that momentum. But then they told me that this small case is a very dynamic product and you don't really have to go through SEBI regulations, there's that, and there's lethargy of like this, you need to have 15% cash and all mandates and everything. Like, just do it. It's a very simple product and then it's very dynamic in nature. You can go full cash any point of time. So all those things I really liked it of small case stuff. And a single click button rebalanced.
Right.
And a fixed fee.
So-
Mutual
so-
fund would take 1% charge.
So with your experience of small case and whatever weekend investing little experience you have had, what are your sort of feedback in terms of any pain points that you have noticed in terms of the process or in terms of the ability of the software to help you what you actually require feature wise? We can always take this feedback to small case also.
Yeah, actually, I mean, most of the things I like it, but sometimes what happens is when you hit the rebalance button, right, some of the trades don't go through. And
Yes.
then you have to make sure that they get into archive and then you again
Correct.
place a new trade and
Correct.
then it goes through. So my
Correct.
point was, I mean, we should not be archiving. It's like give us a day's time or so that automatically the trade. You say that okay, in another one day, you make efforts to make sure that the trade goes through.
Okay. So basically, when you click once and it doesn't go through, the
Correct.
system could maybe retry it after a few
After
hours or
time.
the next day.
Yeah, I mean, for system it's very easy, right? Because you can figure it out that the market.
System it is easy, but I think from a regulatory perspective, each order has to be sent by you and it cannot be automated by the platform. I think that is a regulatory issue there.
Right. So
But,
somewhere this
yeah,
kind of
yeah.
thing is handled, right? So I think for investors
Yeah.
like individual retail investors, right, it becomes
Yes.
like a seamless process.
I think
Right now-
small case platform is also evolving, and they are also working towards making this process more seamless. And this is mostly happening with portfolios which have exposure towards smaller caps or nano cap stock type of stocks which hit circuits or things of that nature. In larger cap portfolios, this issue will not come actually.
So
Yeah.
if you look at again, read the books, right? They say that how much premium you can get. So small caps and mid caps, you get roughly around
Yes.
3%. Value, you get 5%. Momentum, you get 9.5%, and beta, you get 8.5%, right? So I'm done with all the large caps and all the stuff. I want to
Okay.
basically play a mid cap and a small cap game.
Right.
So
Right.
so that's what I'm saying. So it's like one of the things is like this should be a seamless experience. And second thing
Yes.
is like I don't know if dividends could be reinvested in small caps.
Okay. Okay. So this is a good feedback, and we will definitely share that with small case. So before leaving, let me ask you, what is your sort of learning to new investors, if you wish to sort of tell them. You have gone through a 25-year journey to reach where you are. There are a lot of youngsters, who can probably leapfrog a lot of the mistakes we as people of that generation have done. So, what is your lesson and message to them?
So first lesson is there's no need to slog in life. You just take it one step at a time. So that's the biggest lesson. You can create wealth. You can create wealth slowly. Have patience. I think everybody says have patience. I also learned my game after this 5 or 6 years of journey. Second thing is like you can choose vehicles like mutual funds, index funds, ETFs, or you can choose small case stuff. You choose vehicles, do investment on a regular basis. No need to say I want to be this rich in 5 years time frame. Those kind of things will not work, right? And the next part is like study. If you really want to be a good investor, right, read as much as possible. I think that's the best learning I had. Right, whether you make money, you don't make money, it's completely immaterial. But the knowledge that you gain out of this 4 or 5 years of experience is tremendous, and that's most valuable than all the money that you're going to make in the future.
Fantastic. So with these great tips from Mr. Bharath, we will bring it to a close here. So thank you, Bharath, for being a weekend investor, and we look forward to have a long journey with you, which brings you your desired success and takes you to newer wealth levels. So thank you so much, and all the best.
Yeah, Alok, maybe you do so many videos, right, for all
Yes.
the investors. Maybe you
Yes.
should do a couple of videos for youngsters, like kids who are like school going or college going kind of stuff. Right?
Sure.
That would really help.
Great idea. We'll do that. Okay. Bye bye.
Thank you. Bye bye.